Hey, good afternoon. Welcome to my weekly Redfin housing market update. Thanks for joining me. Happy Halloween. Lots of changes in the housing market, and I'm happy you're here because today's a great chance for you to understand what's happening with the housing market from a national level. Obviously, all real estate is hyper local, hyper local. So today we're going to look at a national level perspective. We're also going to look at several metros throughout the United States that you all requested me to analyze. So we'll do that all on today's live. We'll run for about an hour to an hour and 10, 15 minutes or so. So thanks for joining me. All right. Now, what's happening? Well, I should say this first. My name is Jason. I'm a realtor. I'm an investor here outside of Columbus, Ohio, and I am a housing nerd, a proud housing nerd, I may add. So anyway, welcome, and let's get started. So we've got on the deck today, national update. We're looking at the Redfin article, and then we're going to dive into some metro areas. So I've got on the docket, I always do Columbus, Cleveland, Cincinnati, since I live near those metros, and then some other unique metros today. I've got Bend, Oregon. That was a request from someone. I've got Seattle, Washington. I have Santa Cruz, California. That's on the list today. I've got Onondaga. I hope I said that right. Onondaga, New York. That's a county in New York. Someone requested Liverpool, New York, but Liverpool is not a metro on the list that I can pull from. So I had to go with the county. And then I'm doing Nassau County, New York as well. And that is Baldwin. Baldwin is a city in New York that doesn't make the top metro list, so I had to use the county, which is Nassau County. So those are my metros. But if you have a metro you want me to analyze, put in the comments below, either on the live today or on the replay, either one, and I'm happy to analyze it. So anyway, thanks again. Let's get started on the numbers. All right, $387,000, folks. That's where the median sale price is, and it's up 4% year over year. We'll look at that more in a minute. New listings are up, but only slightly, 3.4%. We're only adding, last 4 weeks, we only added 83,000 homes. People are still not listing their homes like many thought they would flood the market with new listings, but they're not. Even when rates were lower. I mean, because, if you think back, mortgage rates a few weeks ago were, when some of this data came in, were lower than they are now. They're over 7% now, 7.02 or so. So it's like, all right, those are lower now, or those used to be lower, and people still weren't listing their homes that much. And then active listings, they are actually shrinking. Now they're up only 14.7% year over year. And pending sales, those are still not impressive. 4.5% year over year increase. And we're facing 7.02% mortgage rates according to Mortgage News Daily. So let's get into the article. So this is a Redfin article. You can go to the link in my description and take a look at this. And we'll just read through it together, just some highlights. So they say, basically, I'll start here in the first paragraph. Mortgage rates rose to 7% for the first time since early July this week, erasing their late summer decline into the low 6% range. Rising rates, combined with economic uncertainty and anxiety brought on by the impending presidential election, are causing some prospective buyers and sellers to press pause, but the effect is smaller than expected. We hear this narrative over and over again that the election, I've actually had buyers tell me this, the election is keeping them on the sidelines. So the question for you is, do you think that's true? Do you think that people are just waiting for the election to be over so that they can run out and buy a house? Well, the election is really soon, like in days, right? So in a few reports, maybe not next report, the week, maybe the report afterwards, we should see a massive spike in activity, right? Right? I would think. I don't know. We'll see. On the buying side, pending sales, U.S. home sales rose 4.5% year over year during the 4 weeks ending October 7th. That's the biggest increase in more than 3 years. They're talking about the increase year over year. They're not talking about the month over month increase, because there wasn't. There was actually a decrease in pending sales. which is normal this time of year. A lot of this is seasonality, but we've been so bad with pending sales that you would think that somehow, some way, we would increase sales. Like if you're in the bottom and all you can really do is go higher, you'd think there would be some increase, month over month, but there's not. On the selling side, new listings of homes for sale rose 3.4%, in line with increases we've seen over the last several months. So new listings is a great way to look at where the distress is. Like if you're not seeing a ton of new listings hit the market, there's not distress yet. I mean, because, if you have to sell your home, if you have to, you're going to sell it, you're going to put it on the market, you're going to leave it on the market, you're going to drop the price until you can sell it, right? I mean, and so if you're the new listing count is going down, that means to me that there's less people that not only want to sell, but have to sell. That's just my opinion, but tell me what you think. But those numbers don't tell the whole story. They basically compare and say, hey, last year at this time, we were at 7.79% as far as the mortgage rate. So now you're comparing rates, in the high sixes or low sevens. So, at the end of the day, we should be seeing more activity, but we're not. The market's just slow right now. It just is. Pending home sales and new and listings are holding up surprisingly well. Are they? Compared to what, though? Compared to last year's horrible numbers? Okay. But not compared to like historical averages. Pending sales and listings are horrible. They're just not good. So there's a quote here. Where am I scroll down here? Yeah, I highlighted this. Mortgage rates surging to 7% after the Fed's interest rate cut is surprising. That is surprising for a lot of people, right? The Fed cut their benchmark rate, and mortgage rates, the 10-year went up a lot, and mortgage rates went up, they almost went up a whole 100 basis points. It almost went up a whole percentage point. I think when they cut, we were at 6.11. Now we're at 7.02. So a big increase. Now, will rates drop coming up? I've got mortgage professionals telling me they will. I've got mortgage professionals telling me they won't. I don't know that any of them really know if mortgage rates are going to go up or down. I think you have to be a psychic to know that. But it's clear that they, being 7% and where home prices are right now, make it really, really challenging for buyers. It just makes it really challenging. And it makes it challenging for sellers too, because they don't want to give up their low rate they already have, right? They don't want to give it up. So they're staying put and they're not listing their homes. They're just not doing it. And so that I think is kind of the tale that we're going to see continually for a while. October. Oh, okay, I'll get right here. Buyers are more cautious. They know they have some time to wait on the sidelines because listings are sitting on the market longer than usual. That's true. I agree with this statement. I do open houses often. I talk to buyers, I talk to sellers, and a lot of buyers are telling me, we're just kind of kicking the tires right now. We're looking at some open houses. We're seeing what's out there. We see something we absolutely love and have to have. Okay, we'll maybe pull the trigger, but we also have a house to sell and we're really not sure yet. So it's not like 2 years ago or 3 years ago where people were like, I got to sell. I'm selling today because I want to buy the next and best house. They're like, I'm going to kind of wait a little bit, which is probably good. Probably want to wait slightly. You probably really want to wait when you buy real estate. Patience is really good in real estate. And if you don't find the exact house you want, or you don't find the property that you want, don't buy it. I think that's a change from what we saw back in the craze after COVID, where people were like, I got to buy now. It's like, well, maybe you don't. I thought this quote was interesting from an agent. They said, the election is playing a larger role in the slowdown that I'm seeing in the past. I think it's partly because the overwhelming stress of the election and partly because the country feels more divided than ever and nobody knows what impact the election will have on the economy or interest rates. Redfin Premier Agent in Philadelphia, Blakely Minton. Okay. Yeah, I mean, again, after the election, what do you say? Okay, post-election anxiety is causing the housing market to slow down. I don't know. Anyway, she also said, but mortgage rates aren't stopping anyone. Buyers are used to high rates. Oh, that's what Heather Mahmood said. Redfin Premier Agent in Phoenix. Mortgage rates aren't stopping anyone. I'm not sure about that. I know they stop a lot of people from buying if they can't find the right price. Right, price is high, mortgage rates high, then you're stopping. Just my take. All right, now let's look at the top line indicators briefly. So daily average fixed mortgage rate 7.02%, highest level since July, basically, down from 7.98 this time last year. Mortgage purchase applications, look at that, up 5% from a week earlier, up 10% year over year. But my guess is this is from when rates were like 611. People put in applications because they're like, holy cow, I can put in application now because rates are 611. Now that they're 7, it'll be interesting to see what happens next week on this report. Do they go down? Applications, because that's really like almost the genesis of the housing demand, right? If mortgage applications are up, means more people are interested in buying. If mortgage applications are down, obviously the opposite. Touring activity unchanged from the start of the year. So how many people are looking at homes? How many people are, going out and looking and seeing more houses? I was thinking about this a couple days ago. I wonder if any of this has to do with the fact that you essentially now have to sign a buyer's agreement to go see a property unless it's an open house. If there's a property listed, you have to sign a buyer's agreement. You have to. If it's listed as a realtor, you can't show a house without a buyer's agreement. And that's like a national rule. So I wonder if that has made a difference in the showings. Be interesting to know. At this time last year, showings were down 16% from the start of the year. So it's unchanged right now from the start of the year. So it's like, well, that was January. In January, there's like nobody buying houses and nobody's seeing houses. So the fact that it hasn't increased at all is interesting, to say the least. All right. Google searches for a home for sale. That's up 2% from a month earlier, a whopping 2%. Down 6% from last year. People are just Googling homes for sale less than they usually do. All right. And if you have any comments, I'll get to them here in a few minutes. U.S. highlights for the 4 weeks ending October 27th. This is the key housing market data for the top 400 metros. Their top line data. Remember, this is national information, top 400 metros. Median sale price, $387,000. I'm surprised that, quite frankly, I'm surprised that the median price for houses went up, not down. I'm surprised by that. Usually, seasonality kicks in. It usually starts to go down, but it went up. Median asking price, biggest increase in 2 years, now at $396,653. So people are asking more for their house than they did last year at this time by 5.9%. That's a median, though. It's not an average. It's a median. Median monthly mortgage payment, $2,593. That's down 3.8% from last year, but up from $2,480 last report. So it's gone up. Costs more now to buy a house than ever. Well, not than ever, but it costs more to buy a house than it did last week. And the payments on average are, or the median is actually more now. Payments are higher. That's what I'm trying to say. Pending sales, 74,000 units, 4.5%, biggest increase in nearly 3 years. It is a big increase compared to the previous years as far as year over year goes, which is not saying a lot. But again, it's just not enough inventory to cause any type of big correction in the market. People are just not putting their houses on the market for sale. You have a lot of people doing wish pricing where they put a house on the market going, my neighbor sold for $450. I'm selling for $475 because my house is better. Everybody thinks their house is better than the neighbor's house. Very rarely will I talk to a seller who's like, you know what? Their house is a lot better than mine. Normally they're like, no, my house is much, much better, Jason. And I'm like, maybe it is. That's cool. But they put it on and then they don't need to sell. They want to sell. And they're like, I'm going to put a price on here that if we get it, then I'm moving. But if we don't get it, I'm just going to take it off the market and try again next year. And so they don't have to sell. They want to sell. And that's kind of called wish pricing. So that's kind of what I'm seeing. New listings, 83. Oh, I'm sorry. Yeah. New listings, 83,295, 3.4%. Just not enough. Not enough new listings. Active listings, 1,031,000 active listings, 14.8%. That's the smallest increase since March. Months of supply, 4.1%, up a half a point. So months of supply is how many houses do you have right now divided by the sale pace of how many will sell in a month. And that's where you get the months of supply. So, right now it looks like uh, we're at it looks like we're increasing. But again, a lot of them are just sitting on the market. They just are. And the sellers are like, I'm not going to move. I'm not going to move the price. I'm just going to leave it on at 465, 475 and not move it. All right. Share of homes off the market in 2 weeks or less. 32.8 down from 38%. Median days on market 40. That's up 7 days. Share of homes sold above list price 25.8. So people aren't overpaying as much as they were before, but it's still 25.8% of the homes sold are still selling above list price. Now, that's not original list. That's final list price. So if I list my home at 100 grand, I discount it to 90 grand. Somebody gives me $90,000. That's actually 10% under my original list, but it's 100% of my current list price. That makes sense? So if it's a price discounted house, it's not necessarily showing the true picture, in my opinion, but people are definitely still buying houses over list price. Average sale to list price ratio, 98.7, down 0.3 points. So again, final list price, not original list. People aren't overpaying as much. All right. Now, they will next go into the 50 most populous U.S. metros, and then we'll look at the charts, then get into the specific metro areas. So this is where Redfin looks at the top 50 metros and says, what's going on with those? All right. Fort Lauderdale, Florida, Milwaukee, Anaheim, Providence, Rhode Island, Warren, Michigan, all had the highest year-over-year median sale price increase. So Fort Lauderdale, Milwaukee, Anaheim, Providence, and Warren, Michigan, all those folks, I mean, look at the price difference from last year in Fort Lauderdale. Crazy, right? Milwaukee, Anaheim, 10%. I mean, especially the East is just, it's nuts with prices. Metros are the biggest year-over-year decreases out of 50. Out of 50 metros, San Antonio and Austin declined in 2 metros out of the top 50. Just two. Just two. So there's 48 metros, folks, where the prices are actually higher than they were this time last year. I mean, that's just, it's surprising. It is. I mean, even though I understand the concept that when you have low pending sales, low turnover, no one listing their houses for sale, hardly, not affordable inventory in the market, you would just think that out of all the houses that sell, the median house is going to decline in more markets than 2 out of 50. You would just think it would, like, eventually, right? But it's not. It's just the housing market is resilient right now. It just is. All right, pending sales. San Francisco, Portland, San Jose, Virginia Beach, Dallas all had the largest increase in pending sales. I mean, I got to think if you're an agent in one of these metros, you're seeing a lot more activity than you did last year. Tampa, West Palm Beach, Fort Lauderdale, Miami, Orlando all had the largest decreases in pending sales. So like 29.5% decrease in Tampa, Florida in pending sales. Probably, I mean, obviously hurricane weather, right? West Palm Beach, maybe the same thing. Fort Lauderdale could be the same thing. Miami could be the same thing. Orlando could be the same thing. It's crazy. It's all Florida. It increased in 35 metros, though, pending sales did. So there are a lot of markets where pending sales are down. New listings. San Jose, Seattle, Washington, D.C., Anaheim, Phoenix all had the largest increase in new listings, homes hitting the market for sale. That's, yeah, I mean, if you're in San Jose, let me look at the top here again. Yeah, look at San Jose. Pending sales up 20% in San Jose and new listings up 21.5%. So they're adding 20% more new listings than they did last year, and they're selling 20% more homes, theoretically, if they all close, all the pending sales close, 20% more homes. So they're like churning, right? More so than a lot of the other areas of the country. We'll look at that more in a second. Tampa, West Palm Beach, Atlanta, Fort Lauderdale, and Orlando all had the biggest declines in new listings. I mean, that goes without saying, right? If your area is wrecked by a hurricane, listing your house for sale is probably not a priority, at least not yet. But I've never been through a hurricane, so I'm armchair quarterback in that one. But it would be logical to me that these would be down in new listings. All right, now we get to some charts. Just these are the Redfin charts they put out. Gives you a flavor, like a graphic representation of what's going on. Median sale price up 5.5% year over year. Didn't they say? No, it is. It's up 5.5%. I just want to check that at the top. Yep, up 5.5% year over year. And it's going up. It's like, woo, here we go, up again. I mean, I've like watched people for 2 years now on YouTube try to predict that, hey, this year is the year where prices are going to fall under last year. No, next year's now it's next year. We're going to fall under the last year. I don't know if we're going to fall under under last year. I have no idea. Right now, the trajectory doesn't show me that. But I mean, anything's possible, right? You could have a massive correction, quickly. But right now, that's not what's happening to the median sale price. Median asking price, that is up compared to last year, but the trajectory's down. But shoot, it's going to be, it's seasonality. It's headed into November. It's going to start to go lower, you would think. And eventually you think that has to affect the sale price, but maybe not. Home buyer housing payments. This is under last year, under 2023, but not by a ton. 3.8%, right? Not a ton. So it costs monthly about what it cost last year to buy a house. Look at 2021. $1,500, $1,600. Let's call it $1,600 this time, 2021, to buy the median price house. Now, median sale price was way back then was where was that? Call it 315. Yeah, 315. No, that's not right. 325 or so. So in 2021, the median sale price was 325, let's call it, and mortgage payments were $1,600 a month. Now the median sale price is 387, and median housing payment is $2,500, $2,600. Nuts! What's happened in the last 3 years? Completely crazy. All right, pending sales up 4% year over year. Again, but you can see it's going down, though. It always does this time of year. Pending sales go down. You can see every year in the winter, goes down, then goes back up when it gets warmer. But again, if you're like at zero, you would think even if like you had a heartbeat in the housing market, you would see an increase. And I'm telling you right now, if new listings spiked, if you saw a ton of distress hit the market, you would no doubt see inventory skyrocket. And if pending sales didn't catch up, you definitely see more inventory. A lot of it, probably. New listings of homes for sale. See, this is just not great. Again, seasonality, I get it, but we're so low. We're like right at where 2023, 2022, 2021 was. We're right there. So it's not like we're not spiking up crazy in new listings. You're going to see the distress. If there's distress in the marketplace, you're going to see it in new listings because people are going to have to sell their houses. They're going to have to put them on the market. Remember all the equity out there. Average homeowner has according to CoreLogic, has $300,000 in equity. They're not going to have to it's not going to be a foreclosure. They're not going to put it to sheriff's auction. You're going to see it in the new listings for the most part. We're not seeing that. Active listings. How many homes are active for sale? Going down. Now only up 14.8, barely over 1 million units. 4.1 months of supply on the market, 33% of pending sales under contract in 2 weeks. We get that. People are basically leaving houses on the market longer. You can see that. Homes sold in the median of 40 days. That's definitely higher than it has been in 4 years. It's a 4-year high. 26% of homes sold above final list price. So not near as many. That's a 4-year low. Not near as many as 2021. At this time, we were like at 40%, but way back in 2022, we were like 55%. Yikes, right? Yikes. I mean, those are some dark times back in the day. Average home sold for 98.7% of final list price. But look at that, starting to threaten to go over 2022. So not as many price discounts probably as we usually see. Redfin Home Buyer Demand Index. They didn't mention this. I don't think they mentioned it. That's a 4-year high. No, not 4-year high. That's back in 20, I guess a 3-year high. So the Home Buyer Demand Index from Redfin is a 3-year high. Jeez. That's I don't see it. At least I don't see it in my listings anyway. I don't know if you're a realtor and you're watching this, chime in. Tell me if you see home buying demand at a 3-year high. I guess it has been really bad, so maybe it is. Maybe this is true. Okay, that is that. Now we're going to go to the metro level data, and I'll peek into the comments here in a minute. Sorry for the delay. All right, that's Santa Cruz. I'm going to start with Columbus. Again, if you have a metro you want me to analyze, drop it in the comments. And you can go here anytime you want, and you can look at a metro level. You can even look at a county level if you need to. Let me get this set up for you guys so you can see it. All right. Let me look at some comments here. What's up, Raymond? How you doing, man? Thanks for joining me today. You guys have to check out Raymond's channel. He is a dude from Southern Ohio, I guess Southeastern Ohio, and just kind of gives it to you straight. And his channel's growing. It's growing. So give Raymond a look and take a look at some of his content. It's pretty good. Makes you think for sure. Housing market is broken. Yeah, it is broken. It is broken, right? It's unfortunate for a lot of people, especially buyers. They just want a house that's affordable. Yeah, it's a shame. But I will say there's a lot of opportunity out there. Now, I'm not just being a cheerleader. There is a lot of opportunity out there. You just have to hunt and look, but it exists. Maybe now could be the easiest time to find an opportunity in a while, because the people that need to sell will, you'll know them. When they need to sell, you'll know they need to sell, because that price will come down. They leave it on the market and the price will continually come down. So, look for those opportunities out there. You could probably, depending on what market you're in, you may be able to find them on the MLS, but regardless of that, they are out there. So the opportunities exist. How do you not have a correction in home values with higher rates in 2025? Well, because that's a great question, Talis. So it really comes down to the median, right? This is all predicated on the median home price, which is the middle price, right? Not the average. If you line up all the houses, what's the house that sells in the middle? Well, if you look at the active inventory of homes in your market, and I can't look at this for any other area except Columbus, because I don't have access to the MLS except Columbus. But when you look at the active inventory and look at the price buckets of where homes are active and what price points they're active in, what you'll see, at least I see it in Columbus, is that lower priced homes are not on the market. They don't have as many lower priced homes as we do expensive homes. So if there's more expensive homes on the market, like the majority of homes that are listed, let's pretend 75% are over the median. Well, that means that I have a pretty good chance of selling a house that when I look at all the houses that sell for the month is going to be higher than what the normal median price is. And it's going to keep driving the median price up. So you have to take it with a grain of salt. It's a cool metric to look at because that's kind of what everybody thinks of, right? All the pundits, me included, I guess, look at that median sale price. But it really is driven from the fact that the active inventory, again, this is for Columbus anyway, is all slated towards the high end of the market. It's not because low price homes aren't selling. It's because there's not a lot of low price homes to buy. And so because those sellers aren't putting those on the market because they're not moving up into the higher price home because of interest rates. So less homes are selling overall, less affordable homes are on the market. And That's what I'm seeing anyway in Columbus. But that's a great question. I hope that made sense. Do. All right, give you one more here. I don't think median list is a great data point because you can list your home for sale at any price. Doesn't mean that's what the market is at to move the property. Yeah, I would agree 100%. Like I'm getting this phrase from stealing it from Michael Zuber at One Rental at a Time. By the way, if you want to find a deal, no matter what, no matter how the market is, watch his channel. Watch One Rental at a Time. He has tools on there, free tools, by the way. If you just go back in his archives and look at his old videos or even new ones, they take you through how to find an opportunity. And his process is dialed in. And if you do it on a daily basis, you will find an opportunity. You will. It may take you a while, and it's a ton of work. But if you really want an opportunity, it's there. And so I would encourage you to check out his channel. Anyway, he uses the term wish pricing. Wish pricing is, I wish my house would sell for this, but it probably won't. So you're exactly right, Talis. I don't know if that's a great way to gauge the market. All right. Good stuff. Thanks for the comments, y'all. Yeah, Zuber's good. He is. Guy knows his stuff. He does. He knows how to, he has a process in finding an opportunity. It's not flashy. It's not dramatic, but man, it'll work if you work it. All right. Now let's get to these charts. All right. New listings in Columbus, Ohio. That's where we'll start. Is CBus. What's happening in CBus? Well, the Buckeyes beat the Lions, the Nittany Lions this weekend. Well, I don't know. They didn't look too good against Nebraska. They didn't really look that great against Oregon. But let's see. New listings. They are down again in Columbus. They keep dropping. They're up 3.1% year over year for new listings, but not anything to write home about. People, same story as it is national. People just don't want to list their homes for sale. All right. Now we'll do active listings in Columbus. Active listings, 6,100. That's a 4-year high, actually, folks. Look at that. A 4-year high of active inventory in Columbus metro area. But it's only up, it's up 19%. But again, not a ton of inventory. But I will admit there are more houses for sale than there have been the last 3 years, 4 years, I guess, 4-year high. Kind of interesting. It would take a lot for this to keep falling down. So we could see continued inventory, maybe sideways somewhat, but there are opportunities out there, no doubt. No doubt. A lot of people thought this Intel thing would like drive up demand 10x. Maybe it will, but that hasn't happened yet, really. It feels like the rental market is more feverish here in Columbus than the buying market. Like the rental prices just keep going up and up and up. All right, that's active inventory. Pending sales. Pending sales. Yeah. I mean, we actually now are almost a double-digit growth in pending sales in Columbus. But again, you came from the basement. So we're threatening to cross over 2022, but I mean, it's not skyrocketing for sure. It'll be interesting to see how the median sale price looks today. I haven't looked at it yet from this report. $343,000. That's ticking along. That's up 4% year over year. I thought we'd be up between 5 and 10% this year. Maybe we'll end up there. It's not crashing, that's for sure. Median sale price not crashing in Columbus. We peaked at 354. Yeah, back in July. So Columbus is showing some signs of inventory, a little sign. It's showing some signs of activity, a little more. But again, this is probably gathering data from when rates were 6.11. Really interesting what will happen next week. And remember, home buyers will return after the election. That's what they're saying. So we're going to find out. Maybe I'll be so busy as a realtor, I won't be able to even do these lives. It'll be like, Jason, we need you every day, all day long. I'll probably refer those people out if it's like mad rush of clients, because you can't serve a ton of clients at once. Not well anyway. All right. So that was median sale price. Now let's do Cleveland, Ohio. Cleveland, Believeland. They won last week. They beat the Ravens. It helps the Steelers. That's good. Thank you, Cleveland. Let's do new listings in Cleveland. New listings in Cleveland, Ohio. Up 3.5%. Pretty much what it was, in 2023, 2022, 2021. Not a ton of new listings, just not. Active listings in Cleveland, threatening to go to a 4-year low in active listings. Wow. Only up 0.83. Remember, Columbus was up like 19% in active inventory. Cleveland is only up 0.83. It's wacky. People are buying homes there, it looks like. Active listings are going down. Could be people taking them off the market too. If active listings go down, but pending sales aren't going up, it could mean people are just going, I'm going to take my home off the market this year. All right, active. Let's do pending sales. Yeah, pending sales at a 4-year low, down 3% in pending sales. So obviously, people aren't buying more homes than they did last year. I would think people are just taking their homes off the market in Cleveland, and it's keeping the active listings from, going up. All right, let's look at median sale price in Cleveland. Cleveland median sale price, 5% growth year over year, $220,000. Yes, you can still buy a home in the United States of America with a pro football team for under $230,000. They peaked at $247,000. Now they're at $220,000. That's going down, but against seasonality, I would think you're going to see that in a lot of metros. Prices do go down in the fall usually, but the point is it's not crashing. I mean, if it's crashing, it's going down underneath last year, underneath, year before. It's not. It's not in Cleveland. Okay, next is Cincinnati. Cincinnati. All right. Cincinnati, 3.6% increase in new listings, about where like Cleveland is, right? Like not anything to write home about in new listings. Active listings up 54% year over year. Holy Toledo, watch out for Cincinnati. Tons of active listings. I got a dog barking in the background. Maybe you can hear that, maybe you can't. That's my dog Elaine. She doesn't like strangers. Sweet dog, but just doesn't like strangers. All right, 54% increase. Wow. Now, my dog's throwing me off. Oops, I did active. Now I'll do pending. Pending sales up 11% year over year. And it's starting to head up at the time of year when normally it's going down, right? So you're seeing more pending sales in Cincinnati. Up 11%. They got some life there. They got active listings, it looks like. They still have a lot more than last year. And they've got some pending sales going on. Some movement. Some movement in the market. Median sale price, $291 in Cincinnati. That's up 6% year over year. Doesn't look like it's crashing. It's kind of just staying, level. I mean, it was at 306 at one point this year, June. 304 back in August in the nasty natty. Now it's at 291. I don't invest in Cincinnati. I don't invest in Cleveland, not because I don't like the areas, just I like to stay closer to my home base. But I mean, a lot of people invest in Cincinnati. There's a lot of investors in Cleveland, partly because the market's still affordable. A lot of buyer. I see a lot of investors in Dayton, a lot like that. There's a guy who comments on my channel. I can't remember his name, Flying J, something like that. That comments. He's from Dayton. So yeah, a lot of activity down there in southeastern Ohio. All right, let's do the next one, which is, and I'll stop here in a little while and take some more comments. Who do I got? Bend, Oregon. Bend, Oregon. Kind of a cool little market to look at. What's going on in Bend, Oregon? All right, new listings in Bend, Oregon. 8.6% growth year over year. It's heading down, probably because it's going to start raining now and not stop till next August. I mean, you have more new listings than last year, but it is going down and it's not a ton more. I mean, it's like what, 83 new listings in Bend, Oregon in 4 weeks, and then you got 77 last year. So a few more new listings. Active listings, how's that doing in Bend, Oregon? Heading down, seasonality maybe, right? But it's up 33% year over year. It'd be interesting to see how the winter goes. Active listings, 1,423. Pending sales. Is there more demand? It's kind of holding steady. Pending sales up 28% year over year. Wow. So more activity than last year, more buying activity in Bend, Oregon. Is there an Intel plant there in Bend, Oregon? There may be. There may be an Intel plant. All right. Now, median sale price. Everybody wants to know median sale price. Median sale price down 1% year over year in Bend, Oregon. 670 G's. G's. I mean, we're just looking at Ohio, right? 260, 220, 350. Now you go to Bend, Oregon, 670. Holy shnikes. I mean, I know that's what houses cost out there. It's not like that I'm like, oh, I'm surprised. It's just, it kind of shocks you when you're used to $300,000 houses and then the median is 670 somewhere. It's down 1%. So it's been going up and down all year. It doesn't look like it's crashing. It looks like it's just kind of following what it usually does, at least from my perspective on this chart. I'm not seeing any big changes. $2023. Yeah, I mean, look at 2023. It went all the way down to 637, then back up in the winter in Bend, Oregon. Went all the way up to 709 at the end of last year. So it could end up lower than last year. I don't know if that means much to somebody when you're at 670 compared to 709. It's like, what's the, is there a big difference in payment? It's still a lot. All right. That's Bend, Oregon. What's next? What is next? Next is Seattle. Somebody wanted Seattle. Kind of in the same market, right? I love the Pacific Northwest. It's a beautiful area. Beautiful, beautiful area. I used to live out there actually for a while. All right. New listings in Seattle, Washington. 18% year over year increase, but it's headed down. It looks like seasonality. I mean, every year it follows almost the same pattern every year with new listings there. Look at that. So if it holds true, then it's going to continue to go down with new listings. Less and less new listings hitting the market. Active listings in Seattle, Washington, up 25% year over year. It's starting to head down probably because new listings are also heading down. So people aren't putting houses on the market. The ones that are on the market are either coming off the market or they're selling, obviously, right? Pending sales. How are those doing in Seattle? Up 16% year over year. Now, this one hasn't followed seasonality at all. At least the other years, it's not like the exact same pattern. So there are more pending sales. Maybe that's why the active listings are dropping. But new listings, let's look at this. Pending sales, 692. And what were new listings? New listings, 728. So barely more new listings than pending sales, which means if all those pending sales close, all things equal, you're only adding a handful of houses to the market. And if you have people with wish pricing that remove the houses after they've been listed for a while because they didn't get what they wanted, that would explain why active listings maybe are headed downwards. Just a theory. I don't live there. I'm not a realtor there, but just a theory. All right, median sale price. Where's this? Is this more than Bend, Oregon, or lower? It's Seattle, so they're looking at the Seattle metro area, so maybe less. Let's look. Oh, we're wrong. 847. So Seattle, median sale price, 847,000. No crash in sight. Look at that. It's just gone crazy. It looks like it peaked this year, 863. And now 847. It could go higher. It could have an all-time high there in Seattle this year, which would be crazy right now in today's market, right? Again, like Talis said, doesn't make sense logically. Right. I mean, if you really think about it and look at the math and look at the logic behind it, it does make sense. But from a human nature standpoint, when you look, it's like, oh, interest rates went up, housing market's going to crash, prices are going to come down. But that's so far in all these metros, that's not what we're seeing. We're not seeing any big price changes or corrections or crashes. Tell me if I'm wrong, but that's what I'm seeing. All right, let's do the next metro. You know what? Let me take any other comments. Nope, no other comments. Okay, good. Keep me on track. Let's do Seattle. Now we get into some interesting stuff. Onondaga. Did I say that right? Onondaga. I think I said it right. New York. That's a county. So you can go to a county level here in Redfin too. Onondaga. Onondaga County, New York. It's a fun name to say. New listings in Onondaga. Down 1% year over year, 100 new listings in the last 4 weeks. Looks like, and that's a 4-year low right now in new listings. I don't know anything about that area, so I'd love to know like what's going on in that area. Like what's the main employer? You know, is it like a trendy town? I don't know. Active listings in Onondaga, New York. 0.37% lower than last year. They're at a 4-year low in active listings right now. Man. I mean, Columbus, or nationally, right, we're at 14%. Columbus, we're at 19% growth year over year in active listings. Onondaga is down to a 4-year low in active listings. There's probably just no inventory there to pick from, I would think. Pending sales in Onondaga. It's like right meshed in with 2023, down 1%. I mean, people aren't buying a ton of homes there compared to last year, but there's not a lot of inventory compared to last year, so that makes sense. People aren't going to buy what they can't buy something that's not there. Median sale price. All right, median sale price, $244,000. Peaked at 270 this year. So it has come down. Looks like it goes down every year for seasonality, but it peaked this year in 2023. They had an all-time high by a lot. Look at that. 270 grand compared to when they peaked this year, 235 grand. So, and they started, where'd they start? Way back at 214 grand. So the prices have steadily climbed there. There's no doubt about it. Let's look back in 2021. Where were they in 2021 at this time? 2021 at this time, 183 grand. So dollars wise, not a huge increase, but percentage wise, it is. Yeah, I wouldn't think these guys it's going to crash in Onondaga because you can't, there's no inventory. It just doesn't look that way anyway. But if you requested this county, I'm curious why you requested it. Do you live there? What are you seeing in that market? The other one is Nassau County, because they wanted me to look at Baldwin, the city of Baldwin, New York. But that's not on here, so I got to use Nassau County. Nassau, did I say that right? I don't know if I said it right. I think I did. Nassau County, New York, new listings. Down 2.7%. This county is always on the top list of median price, year over year increase. So it'll be interesting to see what happens when we get there. But yeah, again, not a lot of new listings. Doesn't look like there's a lot of distress there. Otherwise, you wouldn't see a 4-year low in new listings. That's for sure. Median sale price. Whoops, I don't want to do median sale prices. I want to do active listings. Active listings. 4-year low in active listings. Down 3.72%. 3.72%. Wow. That's just, I mean, it's insane, right? You think about Columbus up 19%. San Jose, I had a lot of active listings compared to last year. But Nassau County, New York, not a lot of active listings. I mean, it's got to be really hard there on that, to find a deal. Harder than most places, I'd imagine. Active listings, folks. Got to have a lot of active listings to have a price correction. Median sale price, 7%. year over year, up 7% year over year. Look at this. They peaked this year at 814 grand. They started the year at 692. And man, oh man, oh man. This is insane. They started at 692 and they peaked this year at 814 and now 764. And then in 2021, look where they started, 605. Holy shnikey, 605. And then now 814 this year they peaked. I mean, you want to talk about unsustainable. Man, oh man. They are headed down now, but still way elevated compared to last year. I mean, that's shocking, that change. The East Coast, the Northeast in particular, is way different than what you're seeing in other areas of the country. Large part because I've had some viewers tell me no new construction at all and high regulation with new builds. And a lot of the housing stock that is there is old and expensive to rehab. So they're like, unless there's a new build that's like over $1 million, you're not seeing new builds like big, sprawling developments like you do in Texas or something. Hence, the prices are really sticky, if not just continue to go up. What's interesting is 2022, there was a major correction. Look at that. In 2022, we saw it go all the way down to 643. But then when they started 2023, they dropped, but then it just started going up and up and up. And then this year, they just kept continuing in Nassau County, New York. All right. Next metro is Santa Cruz. Santa Cruz, California. Let's do new listings in Santa Cruz, California. Santa Cruz, look at that. It's following the same seasonality as last year with new listings. 40 new listings, 5.3% increase year over year. Not a lot at all, but it's all like every year is like jumbled in this one little area here right now in new listings. So it's like nothing amazing, not an explosion of new listings by any means. Active listings starting to go down, could be seasonality, but it's definitely a 4-year high right now in active listings, up 23% in Santa Cruz. 543 active listings compared to 439. About 100, what's that? Yeah, about 100 new listings or 100 more active listings. Okay. So some more to choose from. Pending sales. Now, this is up a good amount compared to last year, up 66% compared to last year. Wow. Huh. So houses are selling there much more than they were last year or even the year before that in 2022. All right, let's look at median sale price in Santa Cruz. This is up and down, probably because there's not a lot of active listings. $1,169,000. So it's under 2022, but I mean, really hard to analyze because look at how it's up and down. Again, there's just not a lot of sales. You only have like in pending sales. What were there? Look at this again. I don't remember. 40. So when you make a move with 40 units sold, you're going to obviously change the trajectory a lot. So that's why you're probably seeing that. Right. But I mean, regardless, it's $1 million, 1.1 million. I mean, okay, so then maybe it drops to 1.1 or maybe $1 million. Well, all right, still over $1 million, whatever. So it's like still expensive to me. And got to be hard to find a deal there. Got to be with that many active listings. It's got to be really hard. But they probably do exist. You just got to hunt and hunt and hunt. Wow, we looked at a lot of diverse markets today. Let's see if I got any other ones. Oh, yeah, somebody requested Houston. Metro. Let me look at Houston. If you have one for me before I end, put it in the comments and I'll take a look. Houston, Texas, new listings in Houston, Texas. Houston, Texas up 10% year over year. So there's some more, new listings hitting the market there. That's good. A little more than normal. More than last year, I guess, not more than normal. Active listings in Houston up 12%. That's all. Again, you would see the distress in these listings. You would see new listings spike. You would see active inventory spike. If people weren't buying like they're not buying now, and then you had a bunch of people that were like, I got to sell my house today or I'm ruined. You would definitely see that in the active inventory. And if people were buying them, you'd see it in the pending sales, right? But you're not seeing any of that. So it's like people are just staying put. Pending sales down 6% year over year. Wow, they're at a 4-year low in Houston, pending sales wise. A 4-year low. Geez. What about median sale price? 4-year high in median sale price. Geez, look at that. $335,000 in Houston, Texas for the median sale price. Up 2% year over year, but it's not crashing. Despite all that new construction, it's not crashing. At least the median sale price is not. And it doesn't look like it's crashing from an active inventory standpoint either. Let's look at median days on market there. I'm curious about what that says. We haven't looked at this in the other metros, but we'll do it here on this one. 43 days up 9 days. It's a 4-year high. Again, I think you've just got a lot of inventory sitting that people don't need to sell. They just are hoping to sell. And if they don't sell it, they'll just move on because you have days on market substantially higher, yet not a lot of new listings and active listings aren't skyrocketing and the price isn't crashing. So if you had a ton of inventory on the market, like new listings were going crazy, pending sales were low, and median days on market was spiking high compared to other years like it is now in Houston, you would think that median sale price would eventually start to go down. It would have to because enough people would drop their price. But it doesn't look like that's occurring. Let's look at price drops. I could be completely wrong here, but let's look at price drops. Now price drops are going up, but they're not a 4-year high in price drops. Active listings with price drops, 8%. Maybe because they're getting closer to winter, they're like, shoot, I need to drop my price, but not enough to create a sale. So that's price drops. By the way, they didn't do price drops nationally. So I'm wondering what that looks like. I'm just curious real quick what price drops look like. Price drops 6.5%. It's steadily gone up all year. This is national, not Houston. But it's not a ton more than last year, up 0.5%. So that's a percentage of listings right now, active listings that actually have a price drop. I think a lot of people thought this would just go parabolic straight up, like we'd hit 10% or something, but we haven't. We haven't. In fact, again, 2022, we saw more nationally at this time. We had 6.7. Now, the housing market continues to be a goofy place in many metros and certainly nationally. All right. So let me do this. Anybody have any other metros? Oh, Luke Combs. Oh yeah, that's that Cincinnati guy. What's up, Luke? I did do Cincinnati. I always do that at the beginning. So you can go back on the replay and listen to that. I'm sure these folks don't want to hear about Cincinnati again. But yeah, go back on the replay and take a look at it. Let me know if you have any questions. Is that Fort Lauderdale, Christopher? Sorry, I'm telling people what's going on. Is that Fort Lauderdale? Is that what you want me to look at? FTL? I don't know is that what that means? Let me know. Anyway, I assume it's Fort Lauderdale. Let me do that. Yeah, Fort Lauderdale. All right. Sorry for the pause, folks. I think it's Fort, how they do it. Fort Lauderdale. Fort Lauderdale, Florida. This is always on this list of movers and shakers and their national list. New listings for Fort Lauderdale. This is amazing. New listings in Florida. I mean, look at this. It's like all grouped together. There's not a huge amount of movement in any year, really, compared to other metros. But Fort Lauderdale, you've got down 10% year over year in new listings. I'm guessing because of the hurricane. If that's where you live, um, Christopher, I'd love to know. I'm guessing the hurricane has wrecked new listings. So I mean, you can see the dip like whoop right down, right when the hurricanes maybe started. People are like, no, not listing my home. Makes sense. I wouldn't either if a hurricane was here. Active listings. I mean, you have 41% more active listings than last year, and it's kind of been steady for um, the last several months. It's been completely steady. Just not a lot of movement at all, but a clear difference than last year. I mean, a massive difference. Active listings, 15,000. Active listings in 2023, 10,894. So you've got 4,000 more listings. Is that right? Wow. That's a big change when you have 15,000. I mean, that is a big change. It's got to be noticeable in the market. Active listings. All right, now let's do pending sales in Fort Lauderdale. Wow, Fort Lauderdale, it's a 4-year low in pending sales. It's been going down. Look at now. So this is like a trajectory you can actually see in a trend. I mean, it's going down and down and down and down. Every year it's gone down. I mean, the 4-year high in pending sales was 1,318,000. No, that's not right. Yeah. No, I can't be right. Pending sales 1,318. It's weird how they have that written out. But it's 1,318 was the peak, and now you're at 508. But it's like gone, like all the years have steadily gone down over time. So I guess people are buying less and less homes in Florida over the last several years. Maybe as prices have gone insane, I'm guessing, and insurance has gone insane. People are like, oh, not going to buy. Let's look at median sale price. Look at this. You have a ton of inventory compared to last year, yet median sale price now 471. That's almost an all-time high from a 4-year look anyway. Yeah. Prices are insane down here. It looks that way. I mean, are you a realtor? Are you an investor or whatever? If you are, I'm just curious if you're seeing, if you're a realtor and your business is way down, or if you're an investor and you're finding deals at all. It just feels like, it looks like there's a ton of inventory there, but yet, and thanks for that suggestion, Christopher. It looks like there's a ton of inventory there, but prices are going up. It looks like they're going to hit an all-time high in Fort Lauderdale. Wow. I mean, it could be, buyer. Okay. Got it. Yeah, it could be that maybe, nothing, the only things that are selling are expensive homes. Maybe none of the homes listed are affordable. Maybe that's the case. Maybe there's just a bunch of condos listed that people don't want to buy because of insurance. I don't know. That's all. Those are just all speculation guesses. But it's nuts that your price has gone like this. You wouldn't think this. Like if I had thought about Fort Lauderdale, normally I'd go, oh, Florida, the hurricane, insane insurance, the prices there have to be crashing. But it doesn't look that way. Wow. Okay. So we've gone 1 hour and 3 minutes. But I appreciate everybody joining me today. It's been great. It's been, I love the suggestions on the metros, and keep them coming. Keep them coming. Overall, I guess just to wrap up here, the election is supposed to, after the election, all these buyers are supposed to return to the market according to the experts, according to Redfin, right? Is that going to happen? I don't know. But I would say if you're looking to buy, if you're looking to sell, if you're looking to invest, if you're a realtor, if you're or if just somebody who's curious about the housing market, look what's going on in your specific local market, as specific as you can get. And you can do that by connecting with a realtor. You can definitely do that. Or you can use Zillow. You can even use you can use Redfin sometimes, but there are ways to find the data uh, in your local market and analyze it like this. So you could start from a metro or county level, like I do, and the Redfin data is free in the data center, and then get a perspective of what's happening from like a 30,000 foot view, and then go, all right, now I'm going to go to a local view, really local, maybe street level, subdivision level, you know, sometimes it's a zip code level, school district level sometimes, and then look at your specific price point. What type of asset do you want? Like if you're not looking for a condo, don't look at condos. If you're not looking for a multifamily, don't look at uh multifamily. Only look at your specific asset in your price range. If you're not buying $1 million house, don't look at $1 million house. So get your price figured out of what you're going to pay, and or what you can pay and what you want to pay, and your target, whether you're an investor or home buyer, doesn't matter, or homeowner, and look locally and track days on market, track new listings. Um, if you see a listing that pops up that you're like, huh, that's a curious house, or you see a house on your street that was on the market that now is off the market, contact, reach out after, if it falls off the market, reach out and find out what's happening with that house. Does the person still want to sell? Maybe they do. If they do, you could get a deal. Maybe. Maybe the thing expired and they thought, all right, now I'm going to have to send the thing to auction. It could happen. Maybe they just want to sell to somebody who wants to live in the house, not an investor. That could happen too. The point is, look in your local market every day, every week, or every quarter, however often you want to, and you will start to see trends happen in your market. You'll start to see what's going on, days on market increasing or decreasing, new listings increasing or decreasing, active inventory increasing or decreasing. How much does it cost to buy the medium price house in that specific asset and price and location? Track it on a regular basis. You will see a trend. And then you can, when you find one that is underneath that price target, then you can go after it and get a deal. That's really basically how it works in a nutshell. So, all right. Thanks for joining me today, folks. Got to do some Halloween stuff now with the kid. I hope you have a safe Halloween. And we'll see you next week after the election and all the buyers return to the market. So I'm counting on it. No, I'm just kidding. I'm not counting on it at all. And I don't really care. I don't know if they'll come back, but we'll see next week. Probably won't happen until the week after, though, as far as the data update. But it's fun to talk about. So, all right. We'll talk to you next week. I'm out.